Thanks very much for the introduction, Don, and thanks to Nicholas and the team at Reed Corporate for putting on this fine conference. It's good to be back over here presenting in person. I'm going to talk to you about RareX today and the exciting proposition we have for you. As the name suggests, we're chasing rare earth elements, and we're very much focused on growing our resource this year and to become one of the top rare earth projects in Australia. We think we'll be the third largest by the end of this year. So I'll explain to you why we believe that and why we're on track to deliver that in this presentation. Quickly, corporate snapshot. About 560 million shares on issue, 7.5 cents, modest market cap, well, a very modest market cap of only $40 million considering some of our peers and where they're at the moment. Cash, $12 million. We raised $10.5 million in March, just before the slight downturn. So we're well funded to achieve our goals this year. I'll touch on the board here. I'll save the management for later. But of note, John Young, who some of you in the audience may be familiar with, was a founder of Pilbara Minerals, which was a very well-received company at this conference for a long time. So very well-credentialed board. Cameron Henry also sits there as our engineering person on the board. He's founder of Primero Group and is now acquired by NRW Group. So the value proposition, what I'm here to talk to you about, RareX, as I mentioned, we're focusing on rare earths. They're a critical rare earths. They're very critical to the New World Order in terms of what we're trying to do in decarbonisation. It's very critical in EVs and wind turbines and those sorts of things. The deposit we're developing is Cummins Range. We're very much focused on growing that, and I'm going to explain to you how we're going to grow that this year. The asset, where are we? Cummins Range, we're in the East Kimberley. We're just out of Halls Creek, so there's another rare earth mine nearby for those of you familiar with the rare earth space called Browns Range. That's a heavies project. We're a lights project. We're focused on neodymium and praseodymium, NdPr. We have a modest resource at the moment of about 20 million tonnes, but we have a very systematic exploration program underway to grow that towards 50 million tonnes and a 1 million contained rare earth oxide this year. Our permitting process is underway to develop this. We put in our mining lease application last Christmas. We're in negotiations with the traditional owners up there to progress that mining permit. We're starting all our baseline work as well, our flora and fauna surveys. We've got water bores that have gone in last week to monitor the water. We've got a bunch of study work underway as well, so very well advanced in the permitting as well. So NdPr, what is it and why do we need it in this day and age? Look, 5 years ago, I'm not sure too many people knew what rare earths were. We're all becoming educated in them. The rare earths, well, there's 17 rare earths, but the ones you need to know about are neodymium and praseodymium, NdPr, we call them for short. And they're critical for the new world economy in high-powered magnets, essentially. In every electric vehicle, there is a rare earth permanent magnet that takes the power from the lithium battery to drive the engine, to drive the wheels as they go around. So if you're bullish lithium and you've made money out of lithium, you need to have a look at rare earths. That's the space we need to be in now. It's probably a laggard of about 2 years behind the lithium boom, but we think it's coming with a vengeance. Also, wind power as well, a very strong user of NdPr and these high-end magnets. The more we move towards renewables, especially offshore wind. Offshore wind is a huge user of rare earth permanent magnets, and you're going to see exponential growth in this space with very limited supply in the short term. And I'll show you a couple of graphs about that in a minute. So as I talked about, you can probably digest this slide in your own time. I won't talk about it too much, but we're seeing OEMs and end users invest in this space quite aggressively. We're all moving towards electric vehicles. I believe that electric vehicles are the future, not hydrogen vehicles. There's just not the efficiencies in hydrogen to decarbonise, but there is in electric vehicles, and that's the space we're very much focused on. And you're seeing governments around the world legislate towards this quite aggressively. The dots on these maps, you can have a look at this in your own time, but this is when various governments have legislated the end of internal combustion engines around the world. So this map moves out to 2040, but what this map doesn't show is for car manufacturers and manufacturers of electric vehicles, they have to tool up to meet these timelines. So if you see 2040, you're probably seeing car manufacturers 10 years ahead of that, having to change their production, their factories from producing internal combustion engines to electric vehicles. And so this is very much underway now. I don't think you'll see many electric vehicles internal combustion engines on the road in 10 years around the world. We are moving full steam towards EVs and hybrid EVs as well. So digest that slide in your own time, but it's an absolute mega trend that's going on. I probably don't need to sell it as much as I used to have to sell it, but it's very important to understand as to what we're trying to do. So how does this translate to use of rare earths and NdPr? This is a slide I really like, the presentation on the left. It's probably not spelled out too specifically there, but each one of those red squares there is another Lynas that needs to come on to satisfy demand. So we're talking about a project the size of Lynas coming on stream every 1.5 years for the next 20 years. And as far as I can see it, I can't see them in the pipeline. This is a staggering amount of demand that's going to come. And look, we see rare earths now at a price of about $140 a kilo. Well, rare earths, NdPr, which is up from the $40 a kilo when I started at RareX. We see it trading in this range from about $120 to $180 a kilo for the next little while. And I won't be surprised if I wake up one day next year and it's hundreds of dollars a kilo. There's just no meaningful supply coming on in the short term. These projects take 3 to 5 years to bring on, so we're very confident in the space we're in. The team, I've talked about why we're in rare earths. You need a team to deliver on this. I'm the least qualified person on that page. The rest of them are very much experts in their field. James Durrance, our project manager. Guy Moulang, who's been doing some exceptional work up there at Cummins Range in proving all the doubters wrong in terms of the size of the project. He's been right in everything he's told me, and we're very happy to have him on board. Gavin Beer, our metallurgist, he's worked on most rare earth projects around the world. He's critical in developing the flow sheet that we're trying to develop, although it's not a particularly difficult flow sheet. It's basically the same as Mount Weld and Lynas and what they're doing. And Michael Prassis, who's just joined us as our Corporate Development Officer, who's in charge of delivering our offtakes and building our partnerships around the world. He's spent the last few years at Peak Resources in Tanzania with a good project there, just in a tough jurisdiction. So he understands rare earths very well, and we're happy to have him on board. ESG, I'll just touch on this quickly. This is something we are committed to. We'll put out our sustainability report shortly. We think we're fundamentally ESG focused by operating in a space that's helping to decarbonise the world, but we also contribute to our communities in which we operate, and we contribute 3.5% of our expenditure to the Jaru people on whose land we operate. And we will continue to take this very, very seriously, and we will continue to commit to our ESG commitments. So look, I've probably talked to this already, but I'll just highlight it again before I delve into the project. We think we're in the right market with the exceptional timing. This is the time to be in rare earths. I talked about the price. We've got the right projects and we've got the right team. So I will talk to the project now and why we think it's a very good one. This is the resource. We've been drilling out there for 2 years. When we went into the project, it was 11 million tonnes. We've brought it up to 19 million tonnes over the last 2 years. The drilling we did last year, we didn't include that in a resource update, but it will become part of a resource update this year. So what we have, as it currently stands, is a modest resource, but I'll show you why we're expanding that resource aggressively at the moment. So I may have mentioned it earlier, but the project is a carbonatite project. So there are 2 mineralised carbonatites in Australia, one of them being Mount Weld, owned by Lynas, the other one being Cummins Range, owned by RareX. Carbonatites are what you want for becoming rare earth mines. There's a lot of talk about ionic clays around the place, but our firm view is you want these hard rock, rare earth carbonatite intrusions. Our premise when we came to the project was that drilling done by previous operators was ineffective in terms of this wasn't a singular mineralised carbonatite, it was a series of stacked lens carbonatites, and it was dipping back in a southwesterly direction, and the drilling was also parallel to that, so it missed a lot of the potential. And the drilling we've done over the last couple of years has demonstrated that, and I'll show you that in the next couple of slides. So this slide shows it pretty well. You can see the base of oxidation there. The historical thinking was that the mineralisation that was worth chasing was only in the top 100 metres in terms of it was enriched in a weathering process. We took a view that while there was some weathering going on, there always is, that the mineralisation would extend into the primary. The drilling we did last year was the drilling on the down to about 150, 200 metres. We proved our concept. And then this year, for the CDX20, that's the hole we've released last week. The visuals, we don't have the assays back yet, but it looks pretty juicy to us. We've stepped back 250, 300 metres down dip and drilled it, and lo and behold, we got more high-grade mineralisation, which was a vindication of our theory. You can see what the mining proposition will look like there. It'll be an open pit at the top, grabbing as much as we can, and then moving to underground to chase some of the more continuous lodes at depth. So that first hole validates our exploration target, which we put out earlier this year. We've drilled 5 holes to date, and everywhere we've drilled we've got mineralisation, so we're on target to achieve our exploration target, which is a good thing. And we've got a second diamond drill rig showing up next week to really hit this thing. We'll step back another 250 metres and continue to drill it out at depth. Aside from the rare earths, being a carbonatite, we have a large amount of phosphate in the system. I hadn't given this too much attention when I arrived, but given phosphate prices and fertiliser attention at the moment, we're starting to look at it. This is an igneous phosphate, not a sedimentary phosphate, so it potentially produces a premium product, which is what you want, because it's not the highest value stuff in the world, but it's about $300 a tonne now, so it is definitely worth looking at. And if you're getting 100 metres at 20% phosphate, I fail to see anyone else drilling holes like that in phosphate land as well. So we've got it out in the north. It is related to the rare earths, but it is separate to the rare earths. It's another phase of mineralisation, part of the fractionation of these things, as my geologists tell me. And so we're not spending too much money on the phosphate. We'll probably spend $500,000 drilling on the phosphate, about $5 million drilling on the rare earths. But we think it's a nice adjunct as to what we're doing. As you can see, the proximity will probably grab it in the same open pit, so a very nice adjunct to what we're doing. In the background, we're running a lot of study work. We've put all the best-in-class consultants on it. We started out doing our scoping study last year, which was based on the oxide. We parked that once we started getting a lot of mineralisation in the fresh. Considering most of our resource is going to be in the fresh mineralisation now, we thought we'd combine it all into one and make a larger scoping study out of the whole project. So we're working hammer and tongs on that as well. That'll be, as soon as we launch our updated resource later this year, you'll see a scoping study / pre-feasibility study out shortly after that. So we think we've got a really good proposition there. I've just spent last week talking to stakeholders in the East Kimberley, and everyone wants to see us succeed in this space. We're looking at land in Wyndham as for a processing plant, close to hydropower from Lake Argyle, close to reagents from the Port of Wyndham. So we think it's a good and exciting place to operate. So that's it, very quickly. That's RareX and the rare earth story. Watch this space. We'll continue to deliver results with the drill bit. And later this year, we'll have an updated resource, which will really show people this is the 3rd largest, if not the 2nd largest rare earth project in Australia. So thanks for listening.